Hello, this is the Chart Profit video, approaching 2 hours into the trading day on Friday 17th of March. This from the pre-open today, looking at the E-mini S&P. This is the June contract, 2-month point of control migrated slightly, so we have support now, first level support at 2367 in here. Last two value areas pretty much above that level. And aggressive buying marked up here on Wednesday. These are usually tested within 2 days, about 80% of the time. Hasn't been tested yet, but it's a sign of strength. But we need to see the E-mini hold above that 2367. Significant selling mark below that level would indicate weakness. I mentioned the level at 2378.50. It's the minor controlling price, and I just said the price relative to that level today, just intraday, could give a clue re strength and weakness. If we look at those two levels on the live chart here, 30-minute chart, here's the support, the major support, 2367. These blue bars are indicating where we opened. So we opened here above this level, 2378.50, and we've immediately come below it. So currently, very minor indication of weakness in just in the day frame. See a value area printed above that level entirely next week would be an indication of strength. We'll talk about that in the pre-open report next week. Looking here at the breadth indicators, daily breadth indicators for the New York through Thursday's close. These two bottom indicators climbed back above the levels that we watch. In both cases, the indicators are above those levels, so therefore we consider that supportive. It gives us a green bar in the middle here for breadth. So breadth has improved a little. It had faded a bit here. And the bottom indicator representing price momentum above zero, so that's one definition of trend up, but the momentum is falling here. When that turns down from any kind of elevated level, has a real strong habit of getting back to the zero line, as we saw over here. Should the indicator get back close to the zero over the next few days, which may be a result of some more churning in this range on price itself, but should it get close, you want to see the momentum turning back up, as it's a habit of doing, as it did again over here. Certainly don't want to see the price momentum dipping below zero into negative territory. We'll look at the market sentiment now. My version of the RIDEX assets ratio was lower to 10.26. That's a 12-day low on Thursday, but down from a reading just above 14 on the 1st of March, which was the second highest in the ratio. In the database. Here's the chart. Only had one previous reading above 14. That was back over here in early 2015. It actually mark the top prior to this trading range across here before the market fell steeply. And 1st of March this year, we've seen another reading here above 14, corresponded to that top of this little correction so far in the market. So we haven't been higher than that at the moment, and that's where we peaked. Subsequent to that, of course, we've seen the ratio dip a little, rally a little, and then fall to this 12-day low that came in yesterday just above 10. So the ratio has fallen the last couple of days, and on Wednesday, of course, we had a reasonable up day here following the rate cut, should say rate hike, and the ratio fell back here, indicating some nervousness following that. You can see just last couple of days the bear fund assets have actually rallied, and the bull fund assets here in isolation have fallen, possibly indicating that as the market spiked up, the bulls took the opportunity to take some profits and maybe wait and see. That's usually, in the short term, a fairly positive sign. Having said that, in the bigger picture for sentiment, we can see that the bear fund assets that we're looking at here in isolation are at an extremely low level. So generally, bears are pretty absent, and in the longer term, from a contrarian perspective, that's not a positive. This is a public poll from AAII. 1 week ago, the bulls percent was down at 30%. That was an 18-week low. Bulls percent slightly higher this week. But we also saw this week that the bears percentage fell back sharply to 38.7%. The previous week, 46.5% bears. That was the highest bears percent since the market low in February 2016. That gave us the lowest net figure down here, this bar here, negative bar. Lowest since back over here at the market low Investors' intelligence giving us a different take. The bulls percentage was actually lower again this week at 53.4, but 2 weeks ago the bulls percentage reached 63.1%, and as we said at the time, that was a really extreme. That was the highest bulls percent since since 1987. So really extreme reading on the bullish side from the newsletter writers 2 weeks ago. Same time, the bears percent fell to 16.5%. That was the lowest since July 2015. So extremely, possibly over bullish reading 2 weeks ago from the newsletter writers. Remembering, of course, that these are contrarian indicators. Good to see that the Russell 2000 ETF IWM, one of our key charts, recovered back above its 2-month point of control at 136.70. This period of consolidation below that level over the past couple of weeks was not encouraging price behavior in my opinion, but we're back above that level, so as long as we hold by 136.70 and we'll monitor it each day in the pre-open, chart remains in a strong price location. Current spider chart looks like this. I have to say that currently there isn't a useful local level controlling price or other useful reference level, the current levels. That's why I'm calling the Russell 2000 IWM much more useful chart, key chart, because we have that local level here at 136.70 to monitor. This is the UK's FTSE 100 index. 4-month is at 72.83 here. That should be strong support going forward if it holds. Have a target for the FTSE 100 just above 7,500. German DAX index holding up really well to the end of this week. Closest support I have is just above 11,500, quite a way down here. This is TLT, the T-bond ETF. For a very long time the major level on this chart was down here, the major point of control at 117.15. It's supported here. Subsequent to that, in this period here, the point of control moved up to 119. Earlier this month we dipped back below that level. Seems to have found support back at the old point of control, spent some time there, actually didn't migrate it back down, so our level is still at 119, but price back above that would be a positive sign for bonds, but currently we're still, right now as I speak, in a weak price location here. This is GLD, the gold ETF. This is a major low over here, up to this subsequent high. We have a halfway point just above or just below 116. We did dip below it late February, we're back above it in a stronger price location. Price back below here again, another failure would probably indicate lower, but price back above the point of control, the major point of control at 119.84 would put gold, GLD, in a strong position. In February we did see a test, a probe up into that controlling price, and that rejection had me leading to the bear side, but the fact that we've recovered a little here is encouraging. Wouldn't make any assumptions about the longer term trend between these two levels. Down here would be weak again, especially a second time, and back up here would indicate higher. Looking at USO, the oil fund ETF, just a couple of weeks ago the point of control, the major point of control, migrated up from this level to here, 1144. Subsequent to that we spent a little time, 2 or 3 days below that level, and then we've fallen rather sharply. Said last week that this may indicate a new distribution has begun. Obviously that would be down, and what's happened from there is we found support at this level here, which is the halfway point from the important low over here to the subsequent high, and we've seen a little bounce. I just have a hunch that oil could become a problem. Just generally, swings on the chart still pretty much correlated to equities, and I wouldn't want to see USO printing back below that halfway point down here. Said last week one scenario that could play out here, and it's just the possibilities. We see a bit of a bounce in oil as equities try another drive higher. Really want to see USO, unless that point of control migrates again back above 1144 up here. If we see, as I said, if we see price down here, I think that's a significant negative. Talked about a number of times in these webcasts over the last couple of months about the level up here where the dollar index stopped its rally. We had a target up here Just from the distribution pattern we've discussed, the possibility of that being an important top, and the fact that the dollar index is back underneath its 6 month at 101, couldn't hold that level when it rallied back up like this. It's not a positive indication. It may oscillate further around it. If that controlling price stays where it is, I want to see more price action, something like, that. Otherwise I'm not convinced. Looking at the Euro FX chart, off a little today, but earlier in the week found support at its 7 months that we identified a while back. Pound has also rallied the last couple of days, just stalling today at the halfway point from this high. That's a dotted blue line. The major level to watch, unless it migrates, which it hasn't yet, is the 124.78, which is the 15 month, and that's just here. Price above that would put this chart back in a strong price location. Be a negative for the dollar. That hasn't happened yet. And if we look at the recent price action in the dollar yen, look at the range from the high here in December to this low, the halfway point. I've seen a rejected probe there. We're now printing back underneath 113.61, which is a 4 month. So this chart in weak location for the dollar here. Okay, that concludes. Once again, I wish you a good weekend, and thank you for watching.